All right. Hello, everybody. We are live once again on another market open. It is April 10th, 2023. It is Monday. So we are starting off a new week. We have 3 weeks left of April. We are basically done with the first 10 days. So we have 20 days left. So just a little under 3 weeks left of April. And we've got a lot to talk about. Markets are red to start off this week. Investors are afraid of a potential collapse in a variety of sectors, mainly earnings, not necessarily tech earnings, but earnings for some other stocks. S&P is down, Dow is down, NASDAQ is down. Lots of different stocks are down. Tesla is down. We're going to open this up just right now and get into everything that we got. Arnold, what's up? Miami Ren, Johnny, Seth, Zocold, Moro, Jason, Felicia. Weekend way too long. Nairo, Ray. Yeah, weekend was kind of long, not going to lie. But it's never long enough. That's the problem. It's kind of long, but never long enough. What was I going to say? My mom and my sister work in education, so they have spring break this week. So they will be home and get to enjoy the beauty of spring break. When you work in corporate America, there is no spring break. But if you work in education, there's always spring break, which is always nice. John Stevens, what's up? Palantir Research, what's up? All right, let's take a look at it. So obviously the big news over the weekend in the context of Palantir, you guys probably all saw the video I did on that and the Palantir Weekly podcast. I don't think there's going to be effect on the stock price. Enphase down below 190. Let's go to Palantir right now. But it's still pretty important news to me. Yeah, Palantir down 803.74. Palantir is not immune to macro. Macro declines are going to affect every stock, including Palantir. So we've seen Palantir come down a bit, and it will continue to come down as we go further and further in a declining macro, and we'll see what happens. We have CPI data this week, which is going to be really interesting, right? Because if CPI comes in below 6%, which it's going to come below 6, but let's say we get 5.4, 5.3, maybe 5.2, probably not 5.2, but around 5.5, 5.6. The Fed's going to have some decisions to make, and I don't know if the market's necessarily going to rally on that because it's probably baked in, but it's going to be good to keep getting inflation coming down and down and down. By October, hopefully, we're at 3%, maybe even 4%. But the news on Palantir over the weekend, not enough to get Wall Street to get excited about it. Also not enough to get Wall Street to get excited because, it hasn't even been implemented yet. We haven't seen growing revenues from that. We haven't seen business deals from that yet. But it's good to know they've worked about it. In fact, I was watching a video where in December 2022, December 2021, there's a video on their YouTube channel where they're talking about the AIP. They're not talking about it as explicitly in sort of the chat UX that they talked about it on the letter, but they were talking about it. So they've been planning on this for a really long time. Apple at 162, Neo down to 886, SoFi 569, C3 AI at 2258, Enphase 188. S&P, you've got a 406.78. So we're down a little bit on the S&P. Let's see how much further we can get on that. Super Micro down below 198. Let's go to the NASDAQ. NASDAQ 12,087. So that's probably going to come in below 12,000 as we open it up. SLG 2329. So SLG is still holding on to the 23s, up from 20 just a week ago. Netflix earnings is tomorrow, 3:35. I want to do a little bit of Netflix preview and see what else we got. But most stocks are down. Tesla announced a new Megapack factory in Shanghai. Tesla is down 2.98%, down to 179 now as well. How's the tooth, bud? Did you cave and go early? Did not cave yet. The Tylenol has been, thank you for asking, Ray. The Tylenol has been subsidizing it, but Wednesday I have my, what do I have? Wednesday I have my root canal. So hopefully it's totally gone on Wednesday. Are you buying Rocket Lab amid? Well, not yet. Look, I like Rocket Lab. Also, Blake, you said, are you buying Rocket Lab with all that YouTube cash? Trust me, YouTube is not, there's not that much YouTube cash. After I don't have a stable job. So after I pay like basic things like my car payments, there's not a lot of YouTube cash left. I'm not buying Rocket Lab yet. It's what 375. Let's see. The reason is nothing to do with Rocket Lab. It's just I just kind of want to see what happens this week. I think a lot of stocks are going to tend to potentially go down a little bit more this week. I also need to look at their earnings numbers because I haven't looked at their earnings. I got some basic numbers in that podcast I did with Matt that if you haven't checked out, you should check out on my channel. Did a deep dive into Rocket Lab, but I need to look at their earnings and I need to look at their future projections for 2023 and going further. So I need to do a little bit of that due diligence before I officially start a position. But I mean, like, if I start a position, it'll be like $1,000 just to get started and eventually hopefully build it up to like a $5,000 position. I'm sold on the thesis, but I have to be okay with that 5,000 just like going to trash, right? Because it honestly could. At the end of the day, it's still very speculative, even though I do think there's a solid chance that over the next 5 years they come out alive. I think Peter Beck, their CEO, is also really good. Just watching some interviews of him, it seems like he knows what the hell he's doing. So definitely excited to invest in him as well. Bitcoin at 28,290. So Bitcoin not being able to find its psychological state of peace above 30,000 yet. It is stuck at that 28,000 range, Square down to 66. Was at 67 last week, so nothing too different from Square, but it's down there. Amit, are you excited about SoFi earnings May 1st? Look, I think SoFi is going to do well on earnings, and then it'll tank as always. So I mean, we'll see. Excited's not really the word. I mean, I'm excited to see what happens, but I'm not expecting something crazy. I mean, they would have to. Last time they were up like 20% in a day. If that happens, that would be awesome. But I don't know. Given this macro, and the only thing I'm excited for is if their deposits increased. Right? If they've increased deposits rapidly, then that would be exciting. I actually talked to an employee of FRC this weekend. And he's a senior level manager there. And he was telling me just like, obviously he was saying the bank is undervalued, right? Because at this price, it is like grossly gross. I mean, this was a $150 stock, right? 170. And now it's at 13. The problem is he says he doesn't think those rich people are bringing their deposits back. And this is a guy in the bank saying this, right? And he's like, if rich people aren't bringing their deposit backs, if they're not, if the bank can't conduct business as usual because they're just not getting people to bring their money back, then they're going to have to do even more layoffs. And a lot of people are going to be affected by it. And he says he doesn't know if the bank can go back to its normal activities that it was before all of this happened. And so it's a bet because FRC is like, it looks ridiculously undervalued, but if they can't get rich people to bring their money back, which is again, their clientele base, they can't do anything at the end of the day. They don't have the money to loan out and make interest. They can't do normal bank activities. And banks traditionally, you don't put a crazy big multiple on them, but when they're this undervalued, I mean, you tend to look at them more seriously. They just got to get more people to come back. Sup, bro? Samroth, what's up? If Tylenol helped, it's not that bad. When you use Tylenol, it doesn't help. Is when you know it's yeah, and it was like that a couple days ago, but it's like starting to get much more better. Enjoyed you branching out and diving into other companies. Enjoyed learning about Rocket Lab. Yeah, Rocket Lab, it's interesting, and I always love learning about other stuff. Right, it's cool to diversify the content and kind of just see other stuff that's going on. So it was pretty interesting. Gabe, what's up? Good morning. All right, we are 2 minutes away from the market to open. Again, we've got a red pre-market for pretty much every stock. Most stocks are not in the green. Even Spotify, look at that. They're at 130. Netflix earnings is going to be interesting. I expect them to really do a good job, to be honest, because the past couple months they've had some bangers when it comes to shows. It wouldn't make sense for them to. I mean, the market still might tank them just because they're not growing as much as we want them to grow. But I don't expect a massive decline in subscribers like it was like 3 quarters ago. That loss of 2 million subs, that's I think what pushed it to like 160 at one point. Overall, I don't believe that heavily in the business model. I believe they spend way too much on content and there's just not enough ROI, but they're going to get the subs. And if they get the subs, then, that's all that Wall Street cares about at the end of the day. All right, here we go. It is 9:30 a.m., April 10th, 2023. The stock market is now open. Wake your ass up. Let's see what we've got. We've got FRC down 4% at $14. Rocket Lab 0.80% down. Tesla opens up a little bit higher than it was in the pre-market, 179.90, 180 down 2.27%. NASDAQ falling below 12,000, 11,971 down 117 points to start up the opening market. Palantir 802 likely going below 8 today. Budweiser has been in some cultural controversy over the past couple of days or weeks at 64.81. That's why I have Budweiser on the watch list, seeing what's happening to them. Apple 161. Again, insiders selling a crap ton of shares of Apple. I would not touch this stock at all. Neo at 888, SoFi 573 down 0.35%, Enphase 188. Let's see if we can get Enphase to 180. That would be exciting, but it's got to get down to 180, and maybe it does if things get a little more turbulent, and we see that there. Microsoft at 288, C3 AI 22, Lululemon at 362, Nvidia 268. So Nvidia was 264 last week. It's recovering just a little bit. It's not fully falling. Remember, it was 230. It was like 225 before earnings. Earnings bumped it up to 235, and then we had 2 weeks of a rally. Now coming in at 267. If inflation comes in lower than expected, Nvidia might be one of those runners, just because a lot of investors are sold on the thesis and they need the macro to confirm that the premium is justified for it. I don't think the premium, like 80 times forward PE, is justified given the growth, but I am not the entire market, and the market has spoken, and they think that Nvidia is justified. Amazon at 100, Meta at 213. A new report came out that says Mark Zuckerberg is occupied 99% of his time with AI versus the metaverse, which makes sense because AI is like it's the next coming of the internet. One would argue that you should be entrenched in that, but spending $20 billion a year on the metaverse. And obviously AI and the metaverse, they can coexist together, but it would be really funny just to see Zuck's, like completely say, screw the metaverse. Like, we're just not focused on it. I don't think he would ever do that, but it would be funny because it would just like, everyone makes mistakes. Like, imagine making like almost $100 billion mistake for shareholders. I mean, like, yeah, I messed up on that one. I'm sorry. It's like, you can't really blame him. It's like everyone knew you were messing up, but it's kind of his ego is just like, no, I have to. But that's what makes him, right? At the end of the day, he built this company. It would just be crazy for him to be like, yeah, we're going to scratch all of this. It's not that interesting anymore. I've been focused on AI. I don't think that would happen, but if it does, that would be hilarious. Bank of America, JP Morgan, banks are down. Look at this. We got an entirely red market. Spotify down, PayPal down, GameStop down, Ethereum 1850, DNA, Ginkgo Bioworks is down slightly. It was up 10% on Friday. Intel is down. Uber is down. Schwab is up. So this is one Chris was talking about, that it seems a bit undervalued, which I would agree. If we go to the 3-month, so this is the major, it was at 81, boop, went right down to 45. So now it's hovering in this 45 to 50 area. 81 was the fair value for a while. I mean, it was stuck at, let's go to the 5-year. So it was at 26 during COVID. It ran up to 100 in 2022. So it was stuck between this $180 range for all of 2022 and really this 74 to 100 range. It went through a couple of ups and downs, but 74 to 74 for about 2 years. One could argue it's down, 40, 50% meaningfully down. There was a short report on Airbnb. I haven't fully read it. I've never liked Airbnb as a company. I think this is the company that got VCs rich and not investors rich. But I don't know if I would necessarily short Airbnb. That's a lot. TJ, what's up? Click the like button. Yes, please click the like button, guys. Helps the algorithm. D Splash, I'm not going to read your comment, but those that know, Finance Junkies last night. Hope you guys enjoy. Why would anyone want to own Meta after hearing that bad management lost them $35 billion? Wouldn't touch this issue unless the world ended, aka TikTok falls. Well, the thing is, Meta still produces $120 something billion of revenue per year, and they are the second largest advertiser after Google. So why would anyone want to own Meta? I still think people would want to own Meta because advertising is like, where do you go to advertise? And AI is only going to make that advertising better and more effective. And TikTok its growth is declining. Even if it's not going to fail, its growth is definitely declining. So, I mean, look, I think some companies, at the end of the day, companies waste money on a lot of stuff. And at the end of the day, if they waste money, they waste money. It happens. But if you can keep the company operational, profitable, and Meta's margins are amazing and keep it going, then I think investors are willing to live with it, right? Like at the end, look, there's a lot of companies that waste a lot. Google, Amazon, the Amazon phone. I mean, they Microsoft, they do a ton of stupid shit. But at the end of the day, their core business is still stable. And you can't blame the founder CEO for wanting to try something different. It's just a question of, if it worked, it would be big. If it doesn't work, then you move on. Like, that's all you can do. Admit many folks are asking to take my seat on Palantir Weekly because we yeah, all of you in Matt's comments saying that he actually works with Palantir every single day. So his take on AIP is not the most excited, but that's because he works with it every day and he says, look, it'll help him, but it's not gonna like revolutionize his life. That's fine. That's he works with the software every single day. He still believes it can be very powerful. I believe it can be very powerful as well. We just have to see it actually be implemented at scale. We haven't seen it be implemented. So the Palantir AIP news has gone over everyone's heads. Completely bizarre. Look, again, I think it's a very big deal. I think it's super cool. I just think we have to see them implement it. I do think that the governance and security protocols and gain of access controls, when I talked to CodeStrap on Friday night, he said that's the biggest differentiator for them. The models are the commodity, the data is what differentiates, and then the governance is what creates the differentiated data to even be effective in the first place, right? So the models, the LLMs, all that shit is fake. Like everyone can replicate it. It's not a big deal. It's like a search engine. Like AltaVista, Ask.com, Yahoo, Google, all the same shit back in 2000. The PageRank algorithm, which is what Google developed in a proprietary way, is what differentiated Google from all the other search engines. And then Google focused on the consumer experience, and then they had the best data because they had the best network effects, because they had the most searches, because of the PageRank algorithm, and they were able to then win. That is exactly what could happen in the world of AIP and chat-based user interfaces for the enterprise. But we have to see that happen, right? And Matt actually uses the software every single day, so it's hard to argue that he doesn't know what he's doing. Coca-Cola, one of the best companies in the world, released new Coke. What? We have new Coke? Hold on. How high can this get me? New Coke. No, I'm just kidding. I've never done cocaine. I'm not lying. I actually never did cocaine. Oh, you're talking about. Oh, I thought cocaine. Actually, you're saying they. Okay, you're talking about my previous comment. Yeah. So even Coca-Cola, right, one of the best companies in the world, they released new Coke. That was a dud. So that proves that Meta could be a dud as well for the metaverse. DRK, what's up? TikTok is super boring lately. Reels are getting better. Yeah, I agree. TikTok is very boring in my opinion. Reels are definitely great. So look, at the end of the day, it's companies make mistakes as long as they can recover. That's all that matters. Power at my place went out. Damn it, went out right at the bell. Gonna have to rewind and check it out. I mean, that's a lie. You're always playing with your nose. You're right. You caught me. You caught me. Honestly, I'm afraid to do cocaine. I don't judge anyone that does it, but I'm so afraid because what if I like go crazy, bro? Like I just can't. Like, it's scary in my opinion. But no judging people who do it. All right, let's look at an Elon Musk tweet. Here we go. Our landlord at SFHQ says we're legally required to keep our sign as Twitter and cannot remove the W, so we painted it the background color. Problem solved. This is the CEO of Twitter. I love this guy, bro. It's just absolutely amazing. And I think I responded to that. And I got to show you guys my other tweet as well. Other tweet I think was gold. I responded to that and I said, I hope I grow up and become as petty as you. Literally, bro, this is amazing. The landlord says you can't get rid of the W. And he's like, well, we're going to somehow show. Like, that's how much he thinks Twitter in its current form or its previous form was a joke. And and this is one thing I'm very grateful for Elon with the free speech stuff, man. Like, he really is like, I do feel like Twitter is a place where you can say what you want and not have to worry too much. And so just like getting rid of the W is emblematic of the fact that he does not care about how we used to make Twitter feel like, it was some elite platform, and getting rid of verification checks for everyone and making it a pay to play game. I also think is good for just equality because you can't arbitrarily say this person is verified or not. This was an ad I got yesterday from a company called Hims. I don't know who's long Hims, but they said 30 to 40% of men experience premature ejaculation. And this was a Facebook ad that popped up. I don't know what Meta was trying to say to me, but they put that in my feed. And, well, yeah, that's it was very interesting. Okay, let's hear David Rubenstein talk about the Fed is going to do. Let's pull that up.
Fed, the banking crisis, so much more. He's got a new TV show as well. We'll talk about it in a moment. David Rubenstein, co-founder and co-chairman of the Carlyle Group. And among those projects is a docuseries that's out a couple weeks still on PBS. But can we start with the Fed? I'm so curious. You saw the jobs number on Friday. It was Easter weekend, so I don't know how many people actually did see the jobs number. We hope a lot. Did you say to yourself, okay, things are actually better or worse than we thought, and therefore when you sort of intuit what Jay Powell has to do about it, where are you now?
Well, it's clear that we have an inability to get the unemployment rate as high as the Fed would like. The unemployment rate's 3.5%. I think the Fed would like it to be higher. They won't publicly say they want it to be 5 or 6%. But there's a tight labor market, and because the market is so tight, they can't get the unemployment rate as high as they would like, and that's a big problem for them. I would say a problem for everybody.
So you think that Jay Powell says, I got to keep putting my foot on the neck of the economy, if you will?
I think that when the May meeting comes up, I think it's likely to have a 25 basis point increase again. More likely than not, yes.
And that's not a surprise for you? Because, by the way, it seems like a surprise for the markets.
Well, markets are sometimes wrong. I would think that the 25 basis point increase is more likely than not because inflation hasn't really gone down as much as they would like.
Okay, so Dave Rubenstein says we should have 25 instead of a pause, which is very interesting because I think the CPI on Wednesday is going to determine how likely he's right on this.
It's about 5.5% now, and they want to go to 2%.
Right. We keep talking about the banks. Where are you on this crisis? Is this a crisis? What does this look like to you?
I think people didn't anticipate something like Silicon Valley Bank, and we were surprised by it. Now I think the federal government has gotten its act together and pretty much solved the problem for the short period of time. You can always have a banking crisis. But is this a short-term solve?
Meaning, is this you remember back in 2007, there was BNP Paribas in the summer. Then we had Bear.
Right.
And there were these moments where it seemed like, okay, maybe things are okay. But it really wasn't solved. And I could argue to you that the implicit guarantee around deposits is sort of a temporary solve. But if you told me that 4, 5, 6 regional banks were going to go out of business over one weekend, by the way, that implicit guarantee may not be explicit anymore. Do you know what I mean?
I understand. Clearly, the federal government is willing to more or less guarantee deposits, but not creditors and shareholders. They're not going to help them out. And that's one of the problems they've had in solving some of the problems with the, let's say, First Republic Bank. There's a gigantic hole in its balance sheet, and anybody who wants to go and buy it needs protection from the federal government, and the government is reluctant to provide that protection.
Have you been looking at any of these banks?
I have not personally been looking at any of them.
But Carlyle in the business
I don't want to talk about what Carlyle. I don't want to talk about what Carlyle is doing. I would just say that many people have looked at these banks, but I think the federal government would prefer to have a strategic buy these banks rather than a financial buyer.
You think it's less morally hazardous if we imply that we're going to save depositors because it's an FDIC bank fund, or does it just give certain bank CEOs license to do things? I'm going to pay a higher interest rate and get these depositors. I don't have to worry because it's insured. It just seems like not quite as bad as what we've done in the past, but it doesn't seem like a good policy.
If you were a regulator, what would you do? If you had said you aren't going to protect depositors, you would have had it run on the bank that we wouldn't have liked.
Do you think that ultimately we need a more explicit policy around deposit protection?
I think probably it'll have to be raised from 250 at some point, but even that isn't going to solve the problem because you really have people who have enormous amounts of money in banks.
And you have big businesses, small businesses that have enormous amounts of cash. So what do you do about that?
Well, if I had the answer to that, I would be in Iowa, New Hampshire, and other places.
Strategic ambiguity. It's the same as our Taiwan policy. It will guarantee.
Yeah, I don't know. I'm not sold on 25 basis points. I mean, I think knowing our Fed, they would definitely want to do that, but I'm not sold on it. I think we're more likely to pause than we get the 25, to be honest. And I'm probably wrong on that. I was wrong on the last couple CPIs, but I don't think we get 25 that easily. Okay, here we have something breaking. French President Macron wants Europe to reduce its dependency on the US and become an autonomous third superpower. This comes right after he spent 6 hours with Chinese President Xi Jinping. He is currently still in China, despite the Chinese military exercises encircling Taiwan. According to Macron, Europe must resist pressure to become America's followers and must avoid getting caught up in the China-U.S. confrontation. The great risk is getting caught up in crises that are not ours. China enthusiastically endorsed Macron's concept of a strategic autonomy, a term Chinese officials constantly refer to in their dealings with European countries. Macron goes further. The worst thing would be that we Europeans must become followers on this topic, and we cue from the U.S. agenda and a Chinese overreaction. Is the U.S. slowly losing allies to China? Will NATO support Taiwan in the case of an invasion? Things are not looking good. This is very interesting. This idea that Europe becomes a third autonomous superpower. I mean, look, Europe is in my opinion nowhere near it doesn't have any level of the innovation, doesn't have any level of the economic support, doesn't have any level of the freedoms that the United States has. It's weird that they want to be a superpower. I mean, they don't even have the military support. A lot of their shit comes from the United States. Getting in bed with China might sound good to them because they get to have their own little superpower. I don't think it's long-term a good option. Donald Trump tweeted yesterday, or truthed, whatever, on Truth Social, World War III. And it's a very interesting tweet for someone to tweet that, or truth it, whatever. Is it true? I don't know. But definitely geopolitical tensions are absolutely rising with what's going on with Xi Jinping and China. Ukraine president, I think he already invited Xi Jinping to come to Ukraine, Zelensky. And they're going to be talking potentially for China to be able to broker some type of peace deal. And again, look, the whole thing is, you want the war to end, but you don't want China to be the reason it ends and for them to be like the negotiator. You want the United States to do that. But the United States has not been doing that at all. What resources does France have on its own? Yeah, other than baguettes. Like, what is, I'm just saying, like, what else do you got, bro? You're fucking, you guys can't even control the protests in your streets, and you're talking about becoming a superpower. Like, come on now. I see the Weejo shirt. My man, stop flexing. Yeah, this was personally given to me by Richard Barlow, CEO of Weejo, company that's down 90% in the stock market. Great company, but would not recommend buying the stock at this point. Realistically, the CPI could be manipulated up or down slightly, whichever way the Fed would like, based on the basket of goods they prioritize. It's kind of the economic theater. Yeah, I mean, yeah, I agree. Let's see what Trueflation is saying. Trueflation says we've got it at 4.3%. We're probably going to get it at 5.5 coming in on Wednesday. So we'll see that there. Macro is hated right now, isn't he, for the raising the retirement age? Yeah, and the thing is, the reason it's not even raising the age, it's the fact that they did it unilaterally, and they didn't even have a democratic process. I think, if they had a democratic process, the decision might have still been the same, but it's like the way he did it was so quote unquote authoritarian that people didn't even feel like they had an input. And these are real people, right? That have to decide on this. And like, maybe he could have made the argument that, look, if we do this, then this, and like, even though the age is up, there's all these other benefits, and made a compelling case for it. But he's like, no, we're just raising it. And that's what really pissed off a lot of the environment. Let's take a look at Mohamed El-Erian. He's been pretty bearish on inflation for a long time. This is his thoughts on avoiding a recession.
To look at the markets with Mohamed El-Erian, Allianz advisor and president of Queen's College, Cambridge. He joins us here on set. Mohamed, great to have you with us.
Thanks for having me.
How are you thinking about the markets at this point? We had the jobs data on Friday. We've got CPI coming up. We've also got a lot of other private data points, i.e. earnings reports, particularly from the banks. So what do you think is the most important thing at this point?
So I think it is all important. I think we're trying to reconcile two things. One is what's been happening in the fixed income market, which is very different from what's been happening in the equity market. And the other thing we're trying to reconcile is within risk assets, different risk assets are behaving differently. So the next few months are going to be really important in reconciling these two things that have to be reconciled as we get into later into the year.
Do you think that the bond market is overreacting to what is going on versus the equity markets, or are the equity markets too complacent?
So I think the bond market has been so incredibly volatile. In the last 2 days, for example, the 2-year has gone from around 360 all the way back to almost 4. In the last month, the range has been 150 basis points. This is a 2-year. This is a rate that's supposed to be anchored by Fed expectations. So the bond market itself is trying to figure out where to go. And we've now discovered what I feared for a long time, which is that prices no longer signal as well as they used to because of the amount of distortions that have happened to the fixed income markets.
So the recession sort of signals that we've gotten may be overblown at this point simply because the 2-year in particular is moving in such a way that indicates maybe speculators are at work. There are other forces at work here.
Yeah, so my view has been that there's no reason that we should fall into recession other than getting another Fed policy mistake. But
So he says no reason we should have a recession unless the Fed makes a mistake. It might get a little choppy. 2-year at 3.951, down from like 4.063. But he says no reason other than the Fed making a mistake.
if you look at the economy, I mean, look at Friday's jobs report. It had what people want to see: solid employment growth, higher labor force participation. That's good for both the demand and supply side of this economy.
So do you think that we don't have a recession?
I think we can avoid a recession. Okay. I don't think when I heard people from many months ago say it's 100% chance of going into recession, not with this labor market. Now, we are seeing weakening, but the most interesting sector to look at is services. And we've had conflicting data. The ISM data came down, but the employment data on Friday showed that services remain the most dynamic sector of the economy.
It's interesting that you have this forecast given SVB, because so many forecasters are saying, well, if you didn't think we were going to have one before, you probably think that we are going to have one at this point. So why do you think that the tightening of credit, which seems to be the primary sort of longer term impact of this banking crisis, why that won't sort of push the economy over in conjunction with the lagged effect of the Fed's rate hikes?
So the debacle over SVP certainly makes a recession more likely. It increases the probability. There's no doubt about this. If you look at the H8 data that came out on Friday, we already are picking up a fall in lending. In fact, the biggest fall since that series started in 1973. Moreover, if you look not at the liability sides of the balance sheet, which we've been talking about with David, but on the asset side, you'll see that there's a real question that as deposits flow out of the banks, what happens to their assets? And that's a real question. So yes, the SVP turmoil makes a recession more likely. Does it make it a done deal? No, it doesn't. It's going to play out over several quarters. It's not a sudden stop. This is not 2008. And there are other compensating factors, but it does make it more likely.
Jason Trenner.
Another week.
It's interesting for Mohammed to go this route because, again, he was calling inflation for a very, very long time. And if he thinks that the labor markets are coming into effect in the way that it needs to, and that the Fed is not going to make the mistake because of the indicators they're seeing are not necessarily the worst, then he might have, a little bit of a unique take on why we avoid a recession. Increasing labor force participation is a good way to increase unemployment. Yeah, that's the other thing, right? Like, because if more people are joining the job markets, there's less people at home, but there's more people also available to be fired, I guess, as they're joining the job markets. When we did also have less jobs, that private payrolls, than we had that were expected, which eventually should tick the unemployment up a little bit. The Fed wants to get from 3.6 to 4.3, which is millions of people unemployed, or at least a couple million. I don't know if we get to that level of unemployment given how tight it is. I mean, like, competition for jobs is like amazing for employees, right? Almost anyone can get a job right now, even if it's not a tech job, you can get a job that's paying decently well. So we would have to see kind of how that plays out over the next couple of weeks. I think CPI is going to be really, really important, and it's going to matter what we get on Wednesday. That's going to determine a lot of the stuff. It might come in hot. Who knows? Now, granted, I don't think it's going to come in hot, but if it does, that would be pretty interesting. What do we have here? Okay, let's take a look at the markets again. Let's get back into these. See if anything has changed. Again, we had a pretty red pre-market. Airbnb is up a little bit. FRC is down. Netflix is down. Tesla 177. Wow, Tesla's down. Nasdaq down. Palantir stuck at 803. So not fully down yet. Apple 160. Neo 898. Enphase right back up to 191. SoFi 574. Microsoft 285 down from 288. S&P 406 stuck at that 406 range. Nvidia stuck at 267. SMCI, look at that, went from 98 to 102 in just a couple of minutes. Google at 106. Has anyone used Bard yet? I still haven't gotten access to it. I haven't tried it. I'm still ChatGPT heavy every single day, so I'm still using that one. Meta 211, Amazon 100, Square 66, Coinbase 60, Snowflake 143, up from 136 2 weeks ago. JP and Bank of America now in the green. Everything else still red. So pretty much still a red market with the exception of a couple things that are flat. SLG from Chris. He's holding on to his bull case on SLG. SLG is giving Chris a hefty dividend every month because it's like a, let's go to the dividend yield. We'll see what it is. It changes constantly, but it is currently 13.52%. So he's getting 13.52% on his money, which is a lot for a REIT. Again, the bull case on this one, 12 billion in assets, 4 billion in debt, $1.5 billion market cap. One of two huge commercial real estate operators in New York, own places like Madison Avenue, and work from home is reversing, which means more and more companies need commercial real estate. I think also the sentiment I've seen just from anecdotally talking to people is like work from home and tech companies is absolutely not staying the way we thought it was going to stay. SLG now at $24. And if that's the case, then, you know, there's going to need to be more commercial real estate that is purchased. And New York is a huge space to buy commercial real estate. SLG should be a beneficiary of that if that happens. Can we all agree that it makes our morning? Practical investing. I appreciate you. I appreciate that. Rocket Labs is green. I feel Bard is definitely getting better, but ChatGPT is still slightly in the lead. Okay, so it makes sense. Let's go to Rocket Lab. Again, didn't make a position in this one yet, but looking at it more deeply, 383 up 1.59%. Market cap right below 2 billion on Rocket Lab. Yeah, and Tesla down 4%. That battery pack thing, we talked about it yesterday on Finance Junkies. It's a big deal, and I started to learn more about this energy business that these are just like printing money for them, right? They just save energy, put them in these battery packs, distribute them across the grid, and the energy business is growing 800% year over year. It's a ridiculous number, and you know the bull case on Tesla as a car company, not even needing to be a car company in order to be a multi-trillion-dollar market, just an energy company, if you believe in the case of the world shifting to cleaner energy, and Tesla being one of a handful of companies really providing the infrastructure just because they have the vertical integration to even be able to conduct the operations necessary to provide energy to the world. The bull case on Tesla as an energy company is still very, very large if you give it 10 years. Which is why I've been buying Tesla. I've been DCing into Tesla. My position is still small, 20 shares. I want to get that to 100 shares. But it is still currently small, and we're just waiting to keep building it up over time. Markets are full without a mid playing in the background are dull. I appreciate it. All right, guys, that's it for me. We'll be back Finance Junkies tonight at 10 p.m. Thank you all for joining me this morning. It's Monday, another week in April. Hope you guys had a good weekend. I'll be in Kentucky this weekend. So if anyone's in Kentucky, hit me up. We can get some coffee. I have some work to do in Lexington, Kentucky. So I'll be there Friday night until Monday morning. So I'll be there this week. Hope everyone has a great week, and we'll keep going from there. And I'm also getting a root canal on Wednesday, which will be fun. Taking a 3-month-old to chiropractor. He's good. Just tension due to umbilical cords being wrapped and being stuck in a womb for 9 months. Hope everything goes well, Steve, for the 3-month-old. I go to a chiropractor 2 times a week, so hopefully he's good. And chiropractors usually get the job done, so it's awesome. Have fun in Lexington. A lot of Rosie next there. Yeah, Lexington's a fun ride. When are you going to Belgium, man? I don't know. I got to get to Europe. I haven't been to Europe since 2016. I was in Stuttgart, Germany. So I haven't been there in a while. So eventually we got to get back there. All right. Let me know when you come to Minnesota. I've never been to Minnesota. I've had the opportunity to go a bunch of times, but I've never been. So I'm looking forward one day to going to Minnesota. All right, everybody. Thank you, guys. We'll see you tonight on Finance Junkies, 10 p.m. Have a great day. Bye-bye.